Are live, everybody. Hey, everybody, this is Josh Searson of World Alternative Media. And of course, I am joined by Tim Picciott of the Liberty Advisor. And we've got a great show for you here today. As I title this video, Wells Fargo is crashing. Can the banking system sustain this crisis? And this is a story that we have been talking about at WHAM for as long as I can remember. Wells Fargo is one of our favorite banks. Of course, I say that facetiously. Wells Fargo has been involved in countless scandals over the years, giving people faulty mortgages, insurance, fake bank accounts. They've been involved in things left and right. Warren Buffett's favorite bank. And if we bring up the stock price on the screen right now, it is alarming to say the least. We have, I think, of around 28.35 at the moment. And if you look at that 6-month chart, it has been in a tailspin for the last couple months. If you haven't already, hit that like button and check those links below. We're going into everything regarding Wells Fargo, the banking system, and more today. As we jump to this Wall Street Journal article, which for some reason I haven't had ad walls on lately for. I think it's a COVID thing. It says Wells Fargo profit drops 89% as it girds for soured loans. Banks set aside $3.83 billion to cover potential losses on loans to borrowers hurt by the coronavirus. And if we jump to the next article we have out of Reuters, Wells Fargo profit decimated as coronavirus-led loan defaults loom. And as this article goes into, Wells Fargo and Co. eked out a first quarter profit of 1 penny per share as a bank set aside nearly $4 billion to cover expected loan losses due to the coronavirus pandemic. And if we jump to the next article here, it says Wells Fargo reports first quarter EPS of just 1 cent as it sets aside more money for credit losses. I'll just go into the key points at the top of this article. As it says, Wells Fargo reported a profit of just 1 cent per share, well under analyst expectations of 33 cents per share. Revenue of $17.717 billion also missed an estimate of $19.284 billion. Amid the coronavirus outbreak, net income dropped 89% to $653 million for the quarter. Now, jumping to the next article out of American Banker, and we're going to round this all up and talk with Tim Picciott about this shortly, out of the American Banker, as it says, Wells Fargo lays out bleak timeline for economic recovery. And it says, like its rival JP Morgan Chase, Wells Fargo is bracing for a rough year ahead. Even as some political leaders predict that the economy will bounce back quickly from the coronavirus pandemic, officials at the nation's fourth largest bank says they expect the economy will contract this year and grow only modestly, if at all, in 2020. Growth, yeah, we're going to see a lot of growth there. The bank is also forecasting a prolonged stretch in which the U.S. unemployment rate sits in the high single digits. I believe we're going to see a lot higher than the single digits. And also, as far as seeing any growth in 2020. The only thing I'm going to see growth in is the amount of Federal Reserve notes that are out there, at least digitally. As we go further into this article, it says the bank is relying less on sharp recoveries and thinking more about a long, slow burn over the next couple of years as it manages its own risks. Chief Financial Officer John Shrewsbury said on a conference call with reporters Tuesday, and you could see Wells Fargo profits plunge, the chart there. JP Morgan Chase and Wells Fargo were the first of the nation's large banks to report first quarter results on Tuesday. Similar to JP Morgan, Wells Fargo has dramatically increased its reserves for loan losses in the first quarter as it prepares for a wave of consumers and commercial loan defaults brought on by the economic fallout of the coronavirus outbreak. For the quarter, the bank set aside $4 billion for loan losses, up from $845 million in last year's first quarter. As a result, earnings plunged by nearly 90% from the same period last year to $635 million, marking the bank's lowest quarterly profit since 2008. And we always see since 2008 or since the Great Depression, what we're witnessing right now is a global depression unlike anything we've ever seen and dwarfs the 2008 crisis, dwarfs.
There's actually something It says trending articles. And so talk about, fiddling while Rome burns. So look over here to the right. FDIC suspends project to modernize agency signage. So, this is so okay. We got a big financial crisis, and they're worried about, like, what, we're going to delay.
It's just unbelievable, isn't it? And I do want to jump to the next article because it'll be interesting to hear what they say, because we're going to go to Tim Picciott right away regarding who is a certified financial planner regarding this issue. But I first want to go to this certified financial planner by the name of Matthew Frankel at the Motley Fool at fool.com. And as this article says, here's why Wells Fargo is falling on Thursday. And as it says, what happened? As a whole, the stock market is having a pretty calm day on Thursday. As of noon Eastern time, the Dow Jones Industrial Average was down by less than 0.3%, and the S&P 500 benchmark index was higher by about 0.5%. And we're going to go into that and more soon. But it says, however, with most big bank stocks reporting earnings throughout the week, the financial sector remained under pressure. The financial sector ETF was lower by 1.4% and is down by nearly 9% for the week. One particularly noteworthy underperformer is Wells Fargo. The massive consumer bank is down nearly 6% today and has lost nearly 19% this week alone. And again, this is from Thursday. This is from yesterday, but nonetheless, it's the most up-to-date article regarding this issue right now. So anyway, as it says, so what? Wells Fargo reported its first quarter earnings on Tuesday. And to put it mildly, investors weren't impressed. Gee, you think? It's not necessarily anything the bank is doing wrong, or even that the business itself is performing poorly, and we'll get into that again later, but rather what the bank sees ahead. Wells Fargo set aside $4 billion to cover loan losses in the first quarter, a $3.1 billion increase from the first quarter of 2019. In short, Wells Fargo is expecting defaults to soar as consumers become unable to pay their bills in this recession. And by the way, we've been in a recession since 2008, papered over. This is bigger than any recession, guys. Continuing on, it says, now what? A big question is why Wells Fargo has performed so much worse than the other big banks this week. And the answer is its business structure. Specifically, other big banks like JP Morgan Chase have large investment banking operations which benefit from volatility. In fact, JP Morgan Chase generated more equity and fixed income trading revenue than in any other quarter in the bank's history. For other banks, this has helped offset the downtrends in the consumer banking business. With almost all of its operations in consumer banking, not investment banking, Wells Fargo doesn't have the silver lining. So, Tim, let's talk about this a little bit. What do you think about what he just said, what Matthew, I think Frankel said, and what is your take on why Wells Fargo is doing so absolutely atrociously right now? Mm-hmm. Of course. By the way, Tim, people are saying that your audio is muted on OBS. There's
Okay,
no
so, all
sound.
right, so you talk, and then I will fix that.
Okay, so he's gonna fix that right away. And but again, what we're dealing with Wells Fargo, obviously they've been involved in all of these scandals over the years, and there's no doubt about it that we are dealing with an absolute catastrophic problem here at Wells Fargo that many other banks are witnessing. Many other banks are going to have to deal with, but obviously Wells Fargo in itself has been involved in all these scandals over the years. And obviously, Warren Buffett's favorite bank, they've dealt with a large amount of public outcry over the years as well. And we've been detailing Wells Fargo's derivatives. We've been detailing Wells Fargo's problems for years. By the way, they say it's okay now, so we can go back to you.
Well, that was I was
Yeah, there's a delay that's really long. So just start talking. I think we how did you got yourself unmuted and then your name disappeared from the bottom of the screen. Okay. Well,
Let me go back to you. While I troubleshoot this.
but anyway, so they've been dealing with many controversies over the years. Wells Fargo obviously got caught with creating fake mortgages, creating fake plans, bank accounts, insurance. They were actually repossessing people's cars a couple of years ago. They say it's no sound and it works again. So there's one person saying it's muted, one person saying
the thing is, it works on certain scenes. So there's different scenes, and so it works on the scene where your video is up, and I've got it's super hard to fix this on the fly, but I can figure it out if you want to just
anyway. But again, we are dealing with a company that has been heavily entrenched. We did a video, I believe, 3 years ago here around with John Snyson regarding Wells Fargo and their controversies and their scandals over the years. And the scandals were so extensive that we went over, I think, 20 of the top Wells Fargo scandals for that year alone. And obviously, we're talking about banks here. So banks are some of the most corrupt institutions in the world. They're heavily involved in most cases with fractional reserve lending and fractional reserve banking. And they're dealing with, in most cases, the government, legal tender laws, a usury enforced by a social contract. And obviously, they're the major culprits in bankrupting us. But keep in mind, they were creating fake bank accounts, and then they created fake insurance plans for people's cars that they never asked for this insurance. So they're paying off their insurance on one end. And then we have Wells Fargo suddenly coming in and saying that they were repossessing people's cars. So they had people actually getting their cars towed away in front of their homes, despite the fact that they were paying their insurance. They had no idea that they created this fake insurance in the back end. And how do you even do that? Like, where's a contract? They didn't sign a contract on it. So this is a kind of corruption that they've been involved in for years. And it's crazy because you think that people would be catching on to that and go, hey, you are stealing our car. What's going on? What's happening here? And that tells you everything you need to know. I mean, how do you even get away with something like that? Anyway, as we've been reporting, if you're just joining us, hit the like button on this video. Tim Picciot's trying to figure out his audio live on the fly here. I'm not sure what's happening here.
Okay, I think I just figured it out. The thing is, I can't go because I have to control each scene individually. And so I know. So the only way for me to do that live, the only way for me to do that is to flip to me. But I think they can hear me now. Is that now I just have to then copy this scene to the other ones live. But this is what you do in live. All right, test. That works there. Test. Work there. Test. Work there. Test.
They said it's good now, so you can go ahead and talk about it.
Cool. Well, yeah, it doesn't have my name down below. We'll fix that. We'll fix that next time. But yeah, with now I'm all scared brain trying to figure out this crap. But yeah, when it comes to these the big banks, people are not paying their mortgages. They're not paying different auto loans, and so then that then is going to then trickle to the big banks who are then reliant upon all this. And so this is much much more than just like Ben Bernanke saying this is just some snowstorm and this is just going to all pass, because this is not just going to all pass because this is, I mean, all this stuff builds and builds and builds and builds and builds. And I mean, I've already been talking with people who are telling me that privately, hey, I'm actually looking at not paying my mortgage for 3 months. I've got the money to pay it, but I'm just not going to pay it for 3 months because I'm going to use that money to then pay down my credit cards. So if you have credit cards at 20% and you've got your mortgage at 3.5%, then that probably does makes somewhat sense to do this.
And specifically, though, in this case, we have Wells Fargo collapsing. And I know you say you can't really talk about specific institutions, but how would a bank like Wells Fargo end up in the position that they're in right now, where we're seeing such a huge collapse of their share, such a huge collapse of their profits? I mean, it's absolutely catastrophic what we're witnessing coming from Wells Fargo right now.
So you're asking how they would get out of that, or how they would?
No, how they end up in that situation.
Well, they end up in that situation because speaking of institutions, we got the Federal Reserve, who is just giving all this free money, and then you've got this huge pressure to always basically prioritize short-term profits over long-term objectives. And so if all you care about is next quarter or tomorrow or what have you done for me lately, and you're not looking at what the bigger picture is, then it's all these perverse incentives. And so people also don't care either. And something like we talked about the FDIC, when you have something like the FDIC, people don't give a what about whether or not how much money the bank actually has, if the bank can actually pay back the money, because they know that the FDIC and daddy government is going to take care of them. And actually, I do think that a lot of people are worried about they're not going to get their money in the bank. What I think they're going to do is I think they'll keep paying your money that's in the bank, but what they might not do is they might not actually, like, instead of having, like, in 1933, they just went and they just took everybody's money and they took everybody's gold. Well, we're not in 1933 anymore. We're not based off a gold standard. So I believe what they'll do is they'll just print it all up, and that will supposedly, quote unquote, fix things. And then when they print everything up, that's obviously going to make, all of our money worth less and less and less, and eventually worth less on a long enough time horizon. But they got in a situation because there's all these perverse incentives, and there's, all this, different government programs to do things. And, and shareholders, really everybody was drunk off this cheap money. And now they've come in, they've saved us by, basically giving all the alcoholics, 25 more kegs and saying, here, go have at it. And guess what? There's more kegs on the way. And you know what? Beer isn't enough now. So now they need to get into harder and harder stuff. We had the Dallas Fed president 3 years ago, Richard Fisher, maybe 4 years ago, say, listen, this market's only was being maintained on heroin and cocaine. His words, not mine, on CNBC, and says now it's being maintained on Ritalin. But again, that was 4 years ago. Ritalin wasn't enough. Now it's fentanyl. Maybe that's not enough. So some other crazy stuff they're dreaming up. And, so we've got the, everybody's favorite. We got the money gun over here. And that's the way we're going to solve all these problems is by, making a mess out of my, my office. That's what we're going to do. We're going to, have the money gun is going to save everything, but money gun's not enough. Helicopter money's not enough. It's going to universal basic income. We've already seen plans floated by the Democrats of.
Okay. So Tim, I wanted to ask though, is Wells Fargo too big to fail? I hate this saying, but what do you think?
Well, I mean, they're too politically connected to fail. I mean, just like you had HSBC was too big to jail. That Eric.
So you envision them getting big bailouts?
Yeah, I mean, Warren Buffett these days is not some, brilliant type investor anymore. I mean, I do have, turned the wrong way, but I mean, one of the first books I ever read on all this stuff was 2007 too, so right before, as all this stuff was breaking down, Benjamin Graham's Value Investor. I've got books by Warren Buffett back there, but nowadays he's not as much a savvy investor is that he, is essentially able to buy off and bribe and politicize his way into these positions where he gets sweetheart deals where if you and I were to, well, first off, we don't have billions of dollars to throw around to do this stuff. But if we did, he was doing stuff in 2008 where, and getting all these tax incentives to do stuff where, you and I would go to jail if we tried doing this stuff. But it's legal what he's doing because he's Warren Buffett and we're not. And so I think, he was a great investor, back in the day and probably a great investor probably, into the early 2000s. And now more than ever, he's basically just a political whore that goes around and, spends his, lobbyist money. And, and since, when you control everything and you control the newspapers and control, you've got all your friends, with Bill Gates and everybody else controlling everything that, I think that they are beyond too big to fail because, it's the bankers control everything. The bankers will survive and we won't.
And we're going to get into all the super chats and more soon. Hit that like button, send in those super chats. We really appreciate it. Don H says, why does Wells Fargo have any customers? That's a good question. After everything that's they've been exposed for, it's amazing to see how many of these institutions continue to get the customers after all is said and done. Like what do you think is the major, indoctrination or propaganda that still keeps people going back to these institutions that have done nothing but screw people over for so long? What do you think?
What gets people coming back to it, I think a lot of it is ignorance. So if people don't understand what's actually going on and they don't understand, like, oh, my money is safe in the bank and there's FDIC insurance, and the FDIC has created a moral hazard where nobody cares about what's actually in the banks because they know they're going to get bailed out. And so it's all this moral hazard that keeps getting built up, and everything is moral hazard. I mean, I was reading today, or unintended consequences, I was reading today about in my hometown, Syracuse, New York. Pretty, Luke calls it Canada. But in Syracuse, New York, there was hospitals where they had to lay off 500 people at St. Joe's because, there's no elective surgeries going on anymore. And they got most of their money from elective surgeries. And so now they had to lay off 500 people because the hospitals were not overwhelmed by people. There was not massive influx of people going in there for coronavirus. Right. But now, guess what? You can't even go outside in even upstate New York, which is nothing like New York City, unless you have a mask on, with threat of, men with shiny badges trying to tell you what's up.
Yeah, and Renaissance Now says Wells Fargo bought our mortgage. I never would have dealt with them otherwise. Well, we do have another article out of bankingdive.com that I want to bring up for you guys. And as it says, Wells Fargo, Citi, JP Morgan won't apply stimulus checks to negative balances. And as the article goes into here, it says, and it's an update, USAA has changed its policy such that it will pause collection of overdrafts by customers of its federal savings bank for 90 days from the date the stimulus check was deposited, the San Antonio Express News reported Friday. The military-focused insurer will apply the policy retroactively to members who had portion or all of their funds taken by the bank in recent days. And I quote, this will allow members access to their full stimulus payment to help cover the cost of rent, food, and other important necessities, USAA spokesman Matthew Hartwig told the Express News in an email. It says, dive brief. Wells Fargo, Citi, and JP Morgan Chase have enacted temporary policies to ensure customers with negative account balances get their full coronavirus stimulus checks. Some financial institutions are applying the stimulus check to negative balances, then passing the remainder on to the consumer, the New York Times reported Thursday. A spasm of activity, likely from the number of customers attempting to check their balances to see if stimulus checks had arrived, caused access issues Wednesday on the app and website of several banks, including JP Morgan, Citi, Truist, US Bank, PNC, and Fifth Third. It's funny because these banks are incredibly inefficient. They might as well be a wing of the government. They basically are a wing of the government. But, I'm hearing a lot about this welfare stimulus check, which is crazy because it's $2 trillion. First of all, the government puts everyone out of work. They destroy all these small businesses. Now, all these hedge funds are pretending to be small businesses to get their bailout, which is hilarious and horrible at the same time. But it's just crazy because it's put people in a position of dependency. And I see people in many cases who say they're not getting their stimulus check because they have $1,000 in their bank. And they've been told unless they spend all their $1,000 on their groceries, which they'll have to do eventually in the next month or two, and they run out of money and, they pay the rent and all that kind of stuff, only then they might get their stimulus check. They ran out of they ran out of money, I believe, yesterday or 2 days ago, as far as their stimulus or the small business loans go. It's a joke to me. And I mean, these things that I'm hearing about Wells Fargo, Citi, JP Morgan not applying stimulus checks to negative balances. Well, in a lot of cases, people have negative balances right now because they don't have jobs because the government put them out of work and they're literally screwed at the moment because they've created a bioweapon to scare everyone into submission worldwide. Tim, what do you think?
Yeah, I was just doing some more technical difficulty stuff and answer a couple questions in the chat because we did have somebody that asked about the protests going on in Arizona. So there are ones going on Sunday and Monday, both at noon. But I did fix the bottom score. They got the audio going, so everything is going all good now. Right. But yeah, these banks are, basically you mentioned the wing of the government. I mean, essentially, just look at the Federal Reserve as a private institution that's made up of these banks, and then these banks then get to go to the Treasury and get all this free money. And then if they end up making money from it, then the banks and the Fed get to keep the money. But then if they don't end up making money, which they won't, they'll make money on some things, other things they won't make money on. And then things they don't make money on, then the Treasury is in a first loss position, meaning that we, the people, are the ones who get to take all the losses, while the banks and the Federal Reserve, they get to keep the profits. Now, the Federal Reserve does keep... They spin this as they give back 94% of the profit, meaning that they take 6% of all the interest, of all the dividends, of all the debt, of everything as their own profit. So they are incentivized to get deeper into debt because then they own everything. And then now you got all these I call them like Q-tards over here who are saying things like, oh, Trump just nationalized the Fed and this is 4D chess and you guys don't understand what's going on. You guys are the ones who are literally, people who are echoing this are literally the ones who are basically the people I'm most pissed off about because...
Well, and it's crazy because these are we are supposed to believe that in order for him to arrest the deep state and arrest pedophiles and arrest Soros, he needs to first destroy the whole economy, put everyone into chains, push global Chinese technocracy. Countless people are starving, all to, it's inside baseball in order to get down to the point of arresting pedophiles. It doesn't make any sense at all. The QAnon stuff doesn't make any sense at all. But what of the stimulus checks, Tim, regarding, Wells Fargo? They say they're not going to be putting it all into, negative balances and stuff. People are going to get their full stimulus check. Again, people are dependent on the banks. It stops people from taking all their money out of the banks. And we're not seeing as many bank runs as you'd expect because people are literally just waiting there for their Trump bucks. What do you think?
Well, what I'm thinking right now is I am checking the balance on my phone to see if my stimulus check money actually came in, because I think I heard that my stimulus may, but of course the internet's going slow over here. But yeah, I mean, people are getting this money. It's basically already spent before they've already gotten it, and it's all too little, too late. It's like, oh, great. I lost my job paying $6,000 a month, but a month and a half later I'll get my $1,200. So that's really going to help out a lot. But for some people, actually are probably making money off this whole deal, where there's because of how the unemployment rolls are working, that if you are now unemployed, there actually are going to be a certain subset of people on the lower end of the spectrum who are actually going to be making more money off of this, not just from the stimulus, but from the there's like part of the Paycheck Protection Program and some of the other things they've got going on, where I think there's an extra $600 a month going towards unemployment. So there's going to be winners and losers, and those people, if you're making more money being unemployed, then you're going to have like literally zero incentive to go out there and find a job. And I'm trying to look at my phone right now to see if I actually ended up getting the stimulus check, because that would be pretty sweet, because I did see it pending the other day. And let's see, going into, it looks like all right, it should in like in 5 seconds as it loads. Yep, the $3,400 credit from the IRS Treasury just hit actually 2 days ago. So
and everyone should thank them so much for all the money. It's crazy, the reality of the stimulus check, because it's first of all $2 trillion historic stimulus, and so much of it goes to like the Kennedy Center for Arts and all this crap, and then they keep running out of money. They keep saying they're out of money. People have to wait for the checks, and then everyone's blaming Trump. Look, I'm not a fan of Trump, but they're blaming Trump for the reason why they haven't gotten their stimulus yet, because they say he wants to write his name on the checks. But the fact of the matter is that they literally are postponing the checks. Also, when it comes to the small businesses, which, by the way, 43% polled say they will not be able to survive this after the fact, and that's a lot of jobs too. And we're looking at possibly 60 million or more, conservatively, jobs being lost in the United States by the end of this. This is a global depression, and it's going to last a long time after the coronavirus is gone. But they're looking at, like, I know one guy, he makes $10 million a year at his business, and the government's giving him $40,000 for the year. It's like, thanks. That helps. And again, it's not even that he should be dependent on the government in the first place. It's the fact that the government has put everyone in this situation by a massive false flag. So that should be concerning everyone, and that literally is destroying. If you want to look at a way for the public to be controlled, put them into poverty, starve them, put them in bread lines, and then you will see a dependent populace begging the government for more out of desperation to feed their family, as much as you will also see them breaking into houses and stealing food. I want to do a quick recap of all the articles that we've gone through since the beginning of the show, because there were technical difficulties. If we can bring up the first, where it shows the Yahoo Finance, the stock price of Wells Fargo at this moment. And obviously, we are seeing a massive dip over the last short while. It's just absolutely ridiculous. Going into the Wall Street Journal article, if you go to the top again, it says, Wells Fargo profit drops 89% as it girds for soured loans. Bounce to the next one out of Reuters, and it says, Wells Fargo profit decimated as coronavirus-led loan defaults loom. And bounce into the next article out of CNBC, and it says, Wells Fargo reports first quarter EPS of just 1 cent as it sets aside more money for credit losses.
I also want to point out, you see at the very top, it says Dow jumped 700 points. I think the first time when we showed that article, it went from 500 to 600 to 700. All off, more bad news. So bad news is good news.
Yeah, and it's crazy. Closes at highest level since March. Yeah, great. Last month, lowest level. It's like, that's the good news. We're closing at the highest level since a month ago. And again, we're dealing with it being pumped so much. If you want to take a good close look at what's really going on, you have to wonder why millions of people are getting laid off. Job losses are extensive and insane right now. And yet the stock market will go up. I mean, what does that tell you? That tells you that we are dealing with a massive pump of the stock market. It's like we've been seeing from a lot of experts, so-called experts out there, saying basically investing is dead. And BlackRock's, I believe it was Larry Fink, says we'll just buy what the Federal Reserve is buying. I mean, what does that tell you about investing right now? And Tim, I have to ask then, I mean, is investing dead right now? Or what do you think?
Well, I mean, certainly the free market is dead. I wouldn't say investing is dead, but the free market and, like if you were to keep your money in cash long term, I mean, that's essentially going broke safely. And there's a lot of people who are going to get wrecked by all these, reckless decisions that the, powers that be are making right now. But yeah, the free market, I mean, the government coming in, not the government necessarily, the Federal Reserve, which isn't technically the government, coming in and buying now junk bonds. So when you've got, those junk bonds should have went down to like 5 cents on the dollar, 10 cents on the dollar. Somebody would have bought them. There's gonna be some sort of price for them, and then they would get restructured. Those companies, guess what? You spent airlines $46 billion on stock buybacks. Now you need a $50 billion bailout. Well, if you guys were dumb enough to basically do that when your stock price was at all-time highs, then you should get the consequences and have to then sell that same stock you bought back and then sell that stock and then raise cash that way. So you game the system and you enrich yourself on the way up, and then we're the ones who get effed, family friendly show, on the way down. And it's infuriating because especially like me, like I was, sitting in put options and stuff. And then I was like, okay, well, great. If it goes down 80%, then I get to buy, 1.5 times more on the way up. But yet this free market is dead. And it's mainly the most sophisticated, people in the world who are the ones that were caught naked in this. So guess what? I don't care if you're a hedge fund or one of these other guys who are out there. You should not be getting saved with my money right now because you guys supposedly should be the most sophisticated people in the world. And you go to BlackRock run by Larry Fink. He was one of the guys who was instrumental in creating mortgage-backed securities. He may have even been the guy potentially.
By the way, Larry Fink, we reported on him about maybe 8 months ago, saying now is the time to buy into the stock market. And he was right temporarily, but he was saying that we're going to the stars and it'll be years, maybe even until 2025 until we see a correction. So, I mean, this guy
better than Janet Yellen. Janet Yellen, in 2017 said that we're never going to see another recession in her lifetime. Now, I know she's pretty old, but...
Well, and she said that when she was in hospital with, you're not going to like this, guys, but let's be real. She had a urinary tract infection, and she had severe mental issues when she was saying that. So that tells you everything you need to know about Janet Yellen's saying that. And obviously, we also heard similar things from her more recently than 2017. I think she said something like that again in 2019 at some point. And again, in December of 2019, the Federal Reserve said they can't see interest rates moving at all in 2020. Well, now we're basically in negative, guys. So how did that work out?
Yeah, and there's somebody else that was saying the same thing too. I was trying to think. It was another really. Oh, Larry Kudlow. What we reported on this, with us and John Sneisen as well, was reporting that Larry Kudlow said that rates would never rise again in his lifetime. Now I know that was probably about a year ago, probably last March. And so I know he's pretty old, but I mean he was right. And then we did that video with I did a video with Tom Hegna on your channel, one of the first videos I ever did, and it was called "Why Rates Are Staying Low Forever." And people are like, "Oh, what idiots! You guys calling rates are staying low forever?" Well, I know the rates can never go up because if the rates go up, then there's a huge amount of bonds out there. There's no way these zombie companies cannot afford any higher interest rates. The pensions cannot afford any higher interest rates. Well, the pensions are a dual sword.
Deborah Diddock on the chat mentioned our idiot prime minister talking about Canada. The great turd hole just used our pension fund to purchase pipelines no one wanted. I mean, and we're dealing with globally. I should mention it was diagnosed. What was it? It was predicted about a year and a half ago by a really good research fund that basically talked about how globally we're seeing the possibility of pension shortfalls reaching as high as $400 trillion by the year 2050. And obviously we are witnessing just unbelievable amount of kickback. By the way, Lauren Sheila says you haven't done your research. The Fed is private. We've done our research, trust me, and we know the Fed is private, but it's tied in with social contract usury and legal tender laws, which also gets marching orders from the government. But obviously the banking sector is far and above the government in most cases these days. And I wanted to also mention a little bit to do with this issue shortly. We're going to get further into it soon. But
saying we haven't done our research, it's like going up to like Michael Jordan and being like, you need to practice basketball some more or something, saying that we need to do more when it comes to the Federal Reserve.
Well, and we are going to go into
we can also point out that I was on the class to win the national competition on the Federal Reserve against Harvard, Yale, and MIT. So, I mean, if this person would like to, debate me, how about we put up $10,000, see who wins on any sort of nuance issue, that I can go from one stream to just ridiculous comment.
We know that, like, obviously, Tim's decisions regarding the markets and the economy over the last 10 years has been very crucial. But I do want to also mention that before we get into anything else, I want to draw back to Wells Fargo quickly. Obviously, one of the most corrupt banks in the world. And I wanted to ask, and that's saying something, I wanted to ask you, Tim, with the possibility of the change of the guard as far as people moving away from the old guard banking system and into maybe crypto, using wealth insurance like gold and silver, all that kind of stuff. Do you see a bank like Wells Fargo surviving this crisis, which could be drawn out 10, 15 years? I mean, how does a bank survive that out of desperation when people are trying to pull their money out of the bank? What do you think?
Well, they survive it because, they're probably, just like, BlackRock is, being the, basically, all the stimulus is basically being funneled through BlackRock in terms of them buying up all the junk bonds. I'm sure there'll be some sweetheart deal where Wells Fargo gives, a few $1 million to this politician and a few $1 million to this politician and a few million, or maybe just spreads it out. And then they'll get some sweetheart deals and because it's, the two big, look what happened in 2008. If we were doing this live stream in 2008, if there were live streams back then, which there weren't, a lot of people wouldn't think that we'd be in the current situation. Current situation we're in maybe now 2 months ago. Maybe they would think we're in the calamity now. They just would have thought it would have taken a lot quicker. But look at these big banks. They're way bigger than they were in 2008. They have us by the you-know-what, even more so than they did in 2008. They're even more systemically important today than they were before. But, eventually, I think what's going to happen is, everything's going to be, a digital currency. It's already like 97% of everything is already digital. And it's going to be like, do you want the government tracked, traced, surveilled currency, or do you want to have something like, not financial advice, but something like Monero, a privacy type coin? Right. And so that is the question. Do you want to have to be on a grid where you get a digital dollar and then, oh, sorry, by the way, if you want your universal basic income, you're going to have to go to get a vaccine, and then you're going to have to, prove if you want to travel, you're going to have to get some other, tattoo inside of you that shows that. And then once they get everybody on the digital dollar, then, oh, by the way, we've got negative interest rates, and now we can just take the money. Oh, by the way, we're going to go and, marry that with social credit scores. And and this does not sound, it sounds somewhat crazy, but I feel like at this stage of the game, if it sounds crazy, it's only because you haven't been paying attention. Because and really the people that this sounds crazy to, you are literally the ones to blame for what's going on, because because all politicians do is they wave their finger in the air, see what ways the wind's blowing, and then acquiesce to public opinion. And so if you're sitting there watching Netflix for 8-10 hours a day, vegging out, not contributing at all to society besides, propagating all these lies and everything else that's going on. And so it does piss me off that, effectively, we get blamed for, a lot of what's going on when you and I and other people here that are probably watching this are trying to help save people.
I know, and it's very frustrating. And obviously, a lot of people are mentioning, Deutsche Bank keeps getting bailouts. Don't you think Wells Fargo will get one? Possibly. But my issue is that, and they probably will, but down the line, you can only print so much. And I think eventually my belief is that we're going to see the system wiped out, and I have faith in that long term. But in the short term, we're in the biggest control complex of history. Andrea van der Kloot says Wells will fail and all will be wiped. No one wants defaulting loans to take over. LOL. And I want to get to the super chats, by the way. I really appreciate all of them. If you haven't hit the like button on this video yet, I really appreciate it if you do, and we'll get into more stories right away. But first, I want to give a shout out to Rohan P, who sent 200 rupees in the super chat. Thank you so much. Says good luck, and good luck to you. Thank you so much. It means a lot to us. Lycan Warrior sent $30 in the super chat. Again, thank you so much. That's awesome. And they said, would collapse of Wells Fargo have the same effect as Deutsche Bank on the entire economic system? Well, that's an interesting question. What do you think, Tim? We're looking at Deutsche Bank, which obviously has still about a $45 trillion derivative exposure. And obviously it's been one of the biggest banks in the world, but has seen a massive collapse going back to 2001. It's just incremental, but nonstop. Comparing with Deutsche Bank, do you think Wells Fargo, if it completely collapsed, would have a domino effect on the rest of the global financial system?
I think pretty much any of these things collapse is going to have a global domino in the financial system, because everything is so interconnected. And we saw, it only took, the world being down for like a week for the coronavirus for everything to go, completely haywire. So yeah, absolutely. I think that, any one of these banks, especially, a bank with the gravitas of Wells Fargo or any of these too big to fail mega banks, and even probably some of the even more regional players, but the regional players will probably end up getting the bigger guys will come in, get loans to buy up the smaller people, just like what happened in 2008. And everything is so interconnected right now that if one thing goes down, I mean, there's just reverberations that are going to go throughout the entire system, which is, effectively, what happened to Bear Stearns, and then that, sort of reverberated to, AIG, and then AIG had to then get bailed out. I'll say it not had, but they had to get bailed out because they, owed money to Goldman Sachs. And then who was at the head of the Treasury? Hank Paulson, who was working at Goldman Sachs. And now, we got Donald Trump in there, but of course, we still have, Steve Mnuchin, who's also Goldman Sachs. And then under Clinton, it was Robert Rubin and Larry Summers. Goldman Sachs.
Good old Larry Summers.
Yeah, and so don't even get me started on Larry Summers. I mean, Robert Rubin is actually probably even more instrumental in breaking down what was it called, Glass-Steagall Act. And then he went on to as soon as he passed Glass-Steagall, which separated investment banking from retail banking, he then went on to go work for Citibank or Citigroup, I think, because it was Citibank. And then once they merged all the other entities together because Glass-Steagall was taken away. Then it became Citigroup, and then he got a huge payoff. I did a video on this a couple years ago, but I think that was like $100 million payoff. So these guys are all politically connected. Same old boss, same as a new boss, and Trump, has filled himself with a bunch of swamp monsters. Even though I did like him and I did, vote for him and I did push for him. Okay,
cringe. But I'll forgive it. We've been working hard to just call out the BS for years here, obviously, and you have been too, and just calling out the similarities between both left and right. We end up with the same financial system, same central planning, same insanity, higher taxes, bigger government all the time, and the biggest control complex we've seen in history, and the biggest global depression we've seen ever before. And I do want to mention Rastamon sent Canadian $2 in the super chat, as well as $1. So thank you so much. This a combination of $3 Canadian in the super chat, much appreciated as always. And they said stocks up, hospitals empty. It just goes back to before. I don't think we will see anything return back to normal for a very long time, and whatever normal might mean. I mean, Tim, when can we ever see anything possibly repair itself and go back to normal without this bubble blowing up any bigger than it already has?
I mean, we are in a bubble economic situation right now where the only way to keep things going, so to speak, is to keep this financial bubble going, which is why, because what the main thing I've really been trying to impart to people is something called sequence of return risk, where it's not the average return that matters, it's the order of your returns. And so if you're 55 to 65 years old and you're about to retire, or maybe just did retire, or maybe you're 70 and you just retired, it doesn't matter if your financial advisor can earn you 8% a year or 10% a year or 5% a year. If year one, you're down 40. If year one, you're down 50. If year one, you're down 20. Well, hell, most people are way underwater anyways. If they're down at all and they're not up 10%, then their whole plan is screwed. Now, same thing works with the pensions. So in 2008, what happened was the average baby boomer, or the oldest baby boomer, was 62 years old in 2008. Now we're 12 years later, so now they're 74. And so there's a lot different dynamics at 74-year-old than there is for 62-year-old. So 62-year-old can go maybe wait another 3, 4, 5, 10 years to pull money, whereas a 72-year-old is like, well, hey, I don't have potentially another 10 years to live, so I need to go pull my money now. So now we're in a situation where people have to pull their money from these pensions, and since they're 65 years old, even if they don't need to actually take their 401ks or IRAs, they would then have to, if they're getting, let's say, $50,000 a year pension, and now your pension's down 30%, I'll use easier numbers. If it's down 20%, you have to then, that pension would have to go, and let's say the pension's withdrawing 4%. I believe the math is it'd have to go up 42% over the next 3 years just to get back to even. Mm-hmm. And so my own investment thesis was, okay, well, we're in a complete rigged, phony, fake economy, but it still could go up from here. So what we did was we went long on several of the, some of the major stock indexes, but then we also bought put options on the S&P 500, and it worked out beautifully because, and it's not a panacea, it's not investment advice either, and the strategy we're doing now is now different, especially for new people coming on board than the other people. But effectively, we had a way where we wanted to limit that sequence of return risk, and it's not my problem that I'm one of the only people out here that was doing that, along with Kirk, who's working with me. And so how come these big pension funds, how come hedge funds whose main job is supposed to be to hedge, how come they weren't doing their own job, which is to hedge. And now it's just been people like, oh, well, Tim, you're making YouTube videos, so how can you be watching your client accounts? But we do have other people now that we have hired on, and we've got Kirk who's doing some of that allows me to do videos in alternative media space. And the more clients we get, the more people we can help, the more people, retirements we can help save, and then it also helps bring more people on.
You can check the links below to become a client of Tim Picciott at thelibertyadvisor.com. And I want to mention, What's Your Prob mentioned in the chat that he's a supporter of Q and saying that many have been arrested or have stepped down. Too many to listen to chat, but nice try. Okay, wait a second here. People haven't. Well, who's been arrested? First of all, Harvey Weinstein, Epstein, who didn't kill himself. Meanwhile, Julian Assange is in prison. Meanwhile, Chelsea Manning is in and out of prison all the time. Meanwhile, they're releasing a bunch of murderers and rapists, but Ross Ulbricht is still in prison. Seriously, Kingsley Edwards' dad, who is been in jail for 27 years for a tablespoon of cocaine, Michael Edwards, he's still in jail. But all these people, these murderers and rapists, a woman that cut off her husband's head in his sleep, they're out of jail. I mean, this is ridiculous. Michael Cohen's out of jail.
Michael Cohen.
Yeah, and at the same time, we have they're saying, well, all these people have stepped down. Yeah, all these major company CEOs have stepped down from their jobs, including Bill Gates, to go and venture into some other creepy crap regarding vaccines and social credit and stuff. I mean, and all these people jumped ship right before the stock market collapsed. So I wonder why that happened.
People are like, oh, well, they predicted so much stuff. Well, if you guys go to my YouTube channel, there's a video that I was kind of trolling Peter Schiff. It's called Tim Picciott Was Right. And this is back when we had like 50 people following me. But I had a video September 16th, 2016 saying Trump is going to win and they're going to blame it on the Russians. And this sounds so crazy. So you know what? Go prove me wrong on this. Find someone that had a fake news list. That's always called a fake news list. Go viral on Facebook. And now if this was Q posting this, everyone would say this is the absolute proof. Called fake news list November 16, 2016, before anybody else had stolen that from the left. I listed one person by name. That one person was Paul Krugman, and then Paul Krugman won the award for fake news. My initials are Trust the Plan, and I don't trust the plan. TTP, Timothy Theodore Picciott.
I don't like apathy. I'm not a big fan of apathy.
But the thing is, like, I can make the case that I'm Q because, and then I had a video saying that Trump effect and why good news is bad news, and that what would happen is that Trump relative to Hillary Clinton would make the stock market go up. The stock market going up would give the Federal Reserve no excuse not to keep the rates low. The rates then having to rise because everything was quote unquote good would then pop the bond bubble. So I mean, you want to compare me to Q? I'll go all day long on this of stuff that I was doing even before Trump even got in there.
And honestly, what happened to April 10th being Go Day? What happened? It's April 17th. I thought.
I think Bob
last June, and oh my God, it's
I think, and actually, shout out to Bob Stanley, who still, I think, owes me a steak dinner because the Fed was supposed to be nationalized January of, it's like, oh, if it's not nationalized by January of 2018, then I'll buy you a steak dinner. I'm like, listen, I hope I lose that
I like bet. Him. I'm not going to call him out,
but it's like, no, I hope, and it's like, I hope I lose that bet. I hope I'm wrong on that. And what Trump just did right now is not nationalize it. All of his enemies are basically stronger. I mean, all the big Fortune 5. I mean, but I think he's trying to do good stuff, and I want to like him, and I certainly love like all the crap he gives to the media, and a lot of the stuff that people don't like him are the same stuff that I do like him. I mean, I spent money on a signed Trump hat, was standing out in a rally in 110-degree weather in Phoenix with a backpack full of water to be one of the first people in line, was wearing a Trump shirt the first day my daughter was born, his first day in office, and I was wearing a Trump shirt and used to have a 6'2" cutout behind me. Now Josh will be like, all right, you kicked off the channel now for saying all that. But the thing is, I'm not some Trump derangement syndrome person, and then I'll get people on a live stream be like, oh, I see he's got a Trump thing over there, so he's some right winger. Meanwhile, this is basically to troll Trump and to make fun of him. The fact that the only way to
the fact of the matter is we're just being consistent in the ideas of freedom and central banking, the issues with central banking, the issues of communist central planning that we see worldwide, the massive spending, all this insanity. It needs to end sooner than later. And by the way, if you haven't already, hit that like button and also join our new newsletter at www.iamband.com. And you could also become a client of Tim Picciott at thelibertyadvisor.com. I highly recommend it because obviously he's had nothing but great results. And I want to get into more stories here, Tim. And we talked about, you alluded to the issue of nationalizing the Fed. And I have seen no evidence that he nationalized the Fed. I'm so sick of hearing this. Can you just quickly debunk that before we get into the next article?
Yeah, I've done a few videos on this. One of them was with Change the News, which it wasn't with Luke. It was with Chris Carabats, who's one of our friends. We did it about a week and a half ago on a Sunday show. And effectively, what is the Federal Reserve? The Federal Reserve's main product is debt. They create debt. That debt is then backed by Treasury bills, bonds, and notes, which are bonds, which is root word of bondage. And so, as a bond holder, you are the highest lien holder of a company or a corporation or whatever if that thing defaults. And so now, by the Fed coming in and buying up all the corporate bonds, if things default, the Fed effectively owns them. And then that's why we had the framers of the Constitution saying, first by inflation, if we ever allow a private central bank to issue the currency and credit of a nation, first by inflation, then by deflation, we will end up homeless on the continent our forefathers conquered. And guess what? They foresaw this over 250 years ago, because they're able to take money out of thin air, print it up, buy up everything, and the Fed and the reason why they're saying this is because the Treasury will be in a first loss position. If you actually know what that means, it means we're the ones who take all the losses. Oh, MAGA, 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 winning, winning, winning. That if there's losses, we get screwed, and if there's gains, the Federal Reserve and the banks get to keep it. Doesn't sound like winning to me, unless you own a bunch of bank stocks. But I think a lot of these people are very good intentioned. They're well-intentioned, but guess what? The road to hell was paved in good intentions. There's a lot of liberals that want to impose carbon taxes for good intentions. And so sorry that your good intentions don't, trump, the fact, no pun intended over there, don't trump the fact that this is a complete screw job. We need these banks to go away. And it's not like banking would cease. It's not like airlines would cease. The people who are responsible would be able to come in and then buy up those companies. There'd still be travel going on. And it's, the government and these companies and the Federal Reserve making everything worse. And what Trump did was give the Federal Reserve more power while, people that don't know anything about this stuff are then trying to take a victory lap. My problem with Donald Trump, the day I got off the Trump train was the day he picked Jerome Powell. And you want to go back, you know what? I don't swear a lot on my podcast. You go back to that podcast I had where the day he picked Jerome Powell, I probably dropped 30 F-bombs in that because I was so pissed. And then meanwhile, I lost tons of followers on my Facebook page. Yeah. People were just lambasting me over that.
People aren't consistent. And this is one of the most, frustrating things that we all have to deal with in independent media. In so many cases, if we're consistent, we have to deal with inconsistent people making irrational decisions and irrational emotional decisions rather than logical ones. And that's one of the things that would have affected you when you called out when you were consistent and said Jerome Powell is a terrible pick. Everyone's a terrible pick, but Jerome Powell is definitely a terrible pick. And on top of that, you get people attacking.
And actually, one of the follow-up shows to that was actually called Being Consistent. Back when I had nobody following it. But the thing is, it has that record because it wasn't about me. It's not about Donald Trump. I would have been way more popular to staying on the Trump train and doing what a lot of these other people like Mark Dice and everyone else just sold out, and Alex Jones just sold out. I would have been way more popular.
To a point until things come to fruition, people realize things. Like I did a video recently called "This Is All a Lie," which I hope everyone checks out. It's kind of slightly going viral for our channel these days. That video would have had 300,000 or 400,000 views at this rate a couple years ago. But anyway, I do want to mention someone's comment here. Rastamon said, do you think a war with China would lead to conscription? Well, I don't believe there would be a draft in that kind of case, because what we'd be dealing with China is basically an alliance, and it's not a good alliance. It's something that's been in the playbook for a long time, and I believe this recent crisis is perfect for an alliance with China, which would cause a global fascio-communist technocratic society. It's been in the playbook for a long time. It's been part of the U.S. government script for a long time. The U.S. government funded the Wuhan lab for $3.7 million to fund studies into coronavirus in bats that are 96% consistent with the novel coronavirus. In 2015, 2018, and currently today, from the bats from the Yunnan caves, which were then blamed for this crisis in the first place. So I believe this was all by the script. I believe this is all perfectly playing out so that China can rise up as a new global superpower. And I believe that is something that not a lot of people are talking about. I did a video called The Chinese Global COVID Takeover that I hope people check out. We're 53 minutes in. I hope you hit the like button and send more super chats. We really appreciate it. It's the only thing that keeps Wham going right now. And check those links below. GoFundMe, Patreon, Subscribestar. I really appreciate everyone that helps out any way you can. Let's jump to the next article, Tim, because I don't know how much time you have left here, but let's go into the next one here out of Zero Hedge that says, Treasury cash balance soars to record $959 billion following bill issuance tsunami. Tim, what do you think about this massive cash balance at the Treasury? What does this mean?
Well, the reason they're doing this is because, there's going to be all these government programs coming up. They need to have cash on hand for these programs. We were told that there's another article that we don't have up here right now, but I saw it earlier today on Zero Hedge, where it talked about the Fed said it has actually doubled. We're monetizing twice the amount of daily treasury issuances that were occurring each day, because we've got the Paycheck Protection Program that's already out of money. And so of course, the stuff that's like the heartbeat of America and going to the small business owner don't have money for that. But big pharma and the banks and all the big CEOs and hedge funds and the Federal Reserve and everybody else, all the big fat cats, plenty of money for you, trillions of dollars for you. And I did see something the other day where it showed like the amount of taxes that are paid by the banks, and so not by the banks, by the corporations. And so the corporations, and I don't even think there should be taxation. I don't think there should be. If there is going to be taxation, there shouldn't be any corporate taxation, because you are the ones who end up paying the corporate taxation anyways. It's a whole nother philosophical argument. But they need to raise money for things like the I want to say plunge protection team, but no, the Paycheck Protection Program, another triple P that we have going on. So yeah, so we go back to the screen over here and we see that look at this hockey stick chart just going up right here, just crazy. It's sort of like the Federal Reserve's balance sheet. How much it's just going nuts over there. Yeah, and so they're just trying to raise money right now for all these other programs they have coming up, because there's going to be a lot of people hurting, and the government is just giving away all these freebies, but they don't have any money to give away. All they do is they steal money from you and me, redistribute to other people, and then other people are eventually going to be like, why am I working so hard when they got the Federal Reserve in 3 seconds can go create $2 trillion or $6 trillion, or oh hey, here's this new coin that we're going to create, and this coin's worth $10 trillion. We'll create 3 of them and just pay off all the debt with whatever stupid concocted ideas they come up with.
It's unbelievable. And if we jump to the next article, Tim, out of Yahoo Finance, this is also interesting. It says the mystery behind the Fed's refusal to suspend bank dividends. What do you think about the refusal by the Fed to suspend bank dividends?
Well, no surprise. There's a lot of other countries that have gone ahead and said that they weren't going to do this. So, kind of going back to the article over here, it's saying, Bank of England and some European central banks have suspended dividends and buybacks and discretionary bonuses. Funny because I did read this article yesterday, but I'm just trying to go over the. And then, ironically, U.S. regulators are going in the opposite direction, and so, they want to be like, oh, well, we can't impede the free market. Well, guess what? It's not a free market. This is I'm calling it crony capitalism, but you probably don't think it's that funny. So,
it's a dad joke.
Yeah. So, anyways, it's just such. Let's go back over here. This is real fresh. To be sure, the Federal Reserve has been heroic when it comes to stimulus measures. It's heroic if you see somebody who's there, trying to get off alcohol and they're having withdrawals. Is it heroic that you show up there with a 30-pack and then, a bottle of Jim Beam? Is that heroic that you help him stop his withdrawals? Because eventually, the alcoholic's either going to, die from, maybe having, way too severe withdrawals, or maybe they're going to, die from the fact that, they're going to overdose on just, whatever they're doing, except now we've moved on from alcohol, and there's nothing heroic about this. The heroic thing would be to do the right thing and not to bail these big banks. George W. Bush even said, what was it, in 2008, he said, in order to save the free market, I had to abandon the free market. Well, we expected out of George W. Bush. I was expecting a lot more out of Donald Trump. And what's the other thing Trump's known for is going bankrupt. So, I was actually hoping that was part of the plan, or maybe the plan is we're going to go bankrupt anyway, so screw it, let's just run up the credit cards.
Well, he likes to play around with debt, right? And that's something that he's always been very upfront about. Donald Trump has always been about the debt, good debt versus bad debt. Same thing as Robert Kiyosaki. They've written multiple books together about that. Of course, we've interviewed Robert Kiyosaki quite a few times here at WHAM, which I encourage people to check out, even if it is old. He called a lot of this stuff, and he did write a book called Fake, about the fake money, fake economy, fake news, fake politicians, fake everything. And I think it's very interesting and worth looking at. And by the way, thanks for the super chat. We'll get to the super chats right away, and hit that like button if you haven't already. We're trying to blast through a few stories here at the end. And for those wondering about Wells Fargo, we broke it down in the beginning, but if we jump back, we'll just go gloss over the headlines quickly, Tim, starting with the Yahoo showing the stock price. It's at 28.35 right now. You see the 6-month chart here, and it's absolutely enormous how much we've seen a collapse in the price of Wells Fargo shares. Jumping to the Wall Street Journal article, it says Wells Fargo profit drops 89% as it girds for soured loans. Jumping to Reuters, we have Wells Fargo profit decimated as coronavirus-led loan defaults loom. Obviously, jumping to the CNBC article here, it says Wells Fargo reports first quarter EPS of just 1 cent as it sets aside more money for credit losses. And obviously in the AB article, it says Wells Fargo lays out bleak timeline for economic recovery. So that is exactly, it's amazing how a lot of these banks that we've warned about for years, we said JP Morgan, all these guys, which by the way, JP Morgan, we recently did a report on them. They said about a year ago, or actually about 6 months ago, to get out of the dollar and put money into gold, which was quite interesting. And then jumping to the banking dive article, 2 articles down, it says Wells Fargo, Citi, JP Morgan won't apply stimulus checks to negative balances. Now, I want to go into the most latest news out of Zero Hedge up front. It says NASDAQ tumbles into red as markets realize there is no reopening plan. Here you see the chart here, and it shows an update too. It says while small caps remain up over 3.5%, NASDAQ has dropped into the red on the day. But the NASDAQ saw history recently, the biggest collapse in one day in history.
Well, it is up. It is up today, so it is up a decent
it's up today.
So.
But generally speaking, the NASDAQ has been slammed since January. What do you think? Where do you think the NASDAQ? I mean, we've gone over this a million times. I feel like we're repeating things, but for those that aren't aware, I mean, the Dow, S&P, NASDAQ, are we going to see the Fed successfully pump it for a while before we see it collapse again and correct again?
I feel like talking like in a Schwarzenegger voice for like pump it up. But no, we do see one of the questions actually had to deal with. Are you saying that that he was losing me with the Federal Reserve analogy and alcoholic, and asking if the Fed is the alcoholic? No, the Fed is the alcohol dealer, and these banks and these zombie companies are the alcoholics. And it's the Fed is now like, oh well, alcohol doesn't work anymore. So here's some heroin, cocaine. Oh, that doesn't work anymore. Here's some fentanyl. Oh, that doesn't work anymore. There's stuff higher than that apparently now that you touch it and you die. So maybe that's what we're going to next. And so the Fed is the dealer in this case, and it's the economy, and the banks and the zombie corporations are the alcoholics and the drug addicts who are just fixated on this cheap debt. And but yeah, in terms of like this whole, we are looking at, let me go back to the screen over here and pull up the NASDAQ chart over there. And so right around the top, I mean, what was it like? Right, so we're showing like right around like February 15th ish, which is when Josh and I had a video that we shot at AnarchoVegas where we titled it, Josh titled it, but it was something along the lines of imminent stock market, imminent danger of collapse. And we were talking about how at the time Trump was actually going to come up with a plan to incentivize people to buy stocks even outside of IRAs and 401ks. But if you do have an IRA or 401k, that is something we can help you out with, to make a shameless plug. But in terms of, you ask where things are going, it almost doesn't even matter where things are going for how my clients are invested, because if the financial assets hyperinflate up, we're protected that way. And if they continue to melt down, we're protected that way. And for the new people coming on board, we have different strategies going on for them, because, you sort of missed the boat, a few months ago when you could have gotten yourself protected. But, how we're able to do this is people who are, helping out and who are, becoming clients, because that really is a big thing. And also the super chats helped Josh out, a ton. So hugely.
And Mr. Virtue says, so is Wells Fargo as bad as Deutsche Bank? I would say that on the scale of as bad, I think Deutsche Bank is probably one of the worst in the world, but they've been in a collapse since 2001, basically. I mean, which one, can you measure which one's worse, Tim?
I was hoping that you were going to talk a little bit longer so I could go up and pull up the chart and try to make a comparison to Deutsche Bank. So let me compare.
Yeah, well, okay. So, I mean, again, Deutsche Bank is dealing with $45 trillion derivative exposure, down from $75 trillion in February 2016. Deutsche Bank has been involved in failed restructuring plans left and right, and we've only seen nothing but bad news out of them for years. They tried to connect with Commerzbank. Interestingly, if you've been to Frankfurt, Germany, which I was, and I trolled Deutsche Bank's headquarters in person, they're literally across the street from Commerzbank, and they make up most of downtown Frankfurt alongside the ECB. So, but I don't know which one's worse. That's a good question for Tim as far as that goes. But they're both terrible. I mean, I wouldn't be involved in any of them, and I think they're both absolutely fraudulent. What do you think, Tim?
Yeah, I mean, not investment advice, but I mean, I would say, without a doubt, in my opinion, again, this is an opinion. I'm not saying to go short it or anything else, but I would say Deutsche Bank by far. And of course, this stupid Yahoo thing is not actually loading up what I wanted to load up. But yeah, I mean, Deutsche Bank, yeah, I mean, they peaked a long time ago. I mean, at least, okay, I've got them pulled up now, so let's go see. I was trying to do a comparison, but when is that? Yeah, I mean, we're talking like right around 2008, 2007. They peaked out. It's hard to see. I mean, about 145, 160-ish. I'm just eyeballing this. And then today is $6. So, and it's gone.
It's gone.
To quote South Park. So,
and honestly, we're looking at the potential of bail-ins, bank bail-ins. That's why they want to push cash risk so badly. And obviously, we're looking at interest rates that are dramatically low into the negative. It just doesn't make sense anymore. It's laughable if it wasn't so sad. And everyone's losing their jobs. Possibly, I think 500 million conservative, a billion worldwide by the end of this, just in businesses and jobs being wiped out. I think the employment rate's going to skyrocket and continue to skyrocket from here because nobody has jobs. And here in Mexico, people are getting is starting to open up again, but
And those are all, fake unemployment numbers. I mean, what they were doing before was fake. But, let's take some more questions.
Look at the labor force participation rate. Okay, yeah, let's take the questions. Crypto Secret Circle sent $5 in the super chat and says, wait till the banks use XRP. By the way, thank you so much for the super chat. Wait till the banks use XRP, unlimited liquidity. Bank of America will acquire Ripple to control XRP. Neo ID 2020 Matic network to scale all layer 1 projects. There's no doubt that XRP is going to be utilized by the banks. Bank of America, as he mentioned, has been a big fan of them for a while. And there's been plans, I think, in a lot of countries around the world. In Mexico, they've been using XRP, and they've been using Ripple at the banks for, I think, 3 years now. Santander, yeah. And they've just recommitted to the continued use of XRP. Well, actually, the continued use of Ripple at Santander in Mexico and in Spain and around the world. I'm in Mexico, of course, and I've seen ads for XRP around here. So yeah, I mean, I have no doubt that it's going to be utilized in the most centralized way. I personally, whatever people want, I don't care. It's a competing currency market and good for that. But and seeing Bill Clinton speak at XRP events tells me everything I need to know. But personally, I would stick to, and this is my opinion, I would stick to privacy coins, and I would stick to things like the king at the time, Bitcoin. Obviously, things change, markets change and adapt. And if things are better if there's better cryptocurrencies out there than Bitcoin, then so be it. And then we'll see replacements based on individual demand.
And if you think they can skyrocket, I mean, one thing we're doing for people that I was sort of a pioneer in is doing, Roth IRAs that have crypto in it, where you hold the private keys. And if, let's say, hypothetically, if a coin, 100x's, and I'm again, not predicting this, but if it goes up 100x, then that would be a tax-free 100x, at least for Americans, just trying to make the best of a bad situation. Right. But I do have to get going soon.
So I want to wrap it up then here. And Rastaman says, World Alternative Media, you've helped me prepare a lot of the times ahead. Thank you. Keep being great. Well, thank you so much. Thank you for watching, because those of you that watch are really keeping us up and running, just helping with the algorithm, because we are shadow banned. So sharing on social media helps a lot. Hitting the like button on this video helps a lot. Seriously, it's amazing how much just hitting the like button helps. Look at our other videos. Hit that notification bell. Subscribe if you haven't subscribed yet. Rastamon sent another Canadian $1 in the super chat. And seriously, those super chats go so far. So I really, really appreciate that. Vention MGTOW says IRAs are tax-free until the feds seize them. Quickly, what do you think of that, Tim?
Okay, well, if you have the private key, then how are they going to seize it?
That's true. There we go.
I mean,
and that's the issue.
You think I haven't thought of these things like 100 steps ahead of like everybody else. So so unless they hold a gun to your head and take the private key, which they could do, whether you have it in an IRA or not, then there's nothing for them to seize. And they're not going to seize it because they're just going to print money, because it's not 1933 anymore. And so the game plan is, I mean, if they go and take everybody's stock, can you imagine the uproar that's going to be? What they're going to do is, well, first they'd have to take the guns before they take the people's stock. They're just going to go print money. And then with a crypto IRA, I don't have the private keys. I don't want to get taken to Mexico and kidnapped or something. I'm right here in Arizona. So, what we're doing now is we are, in situations where people can hold private keys in their in their IRAs, which is, a cool thing. I don't know too many people that can do that. I mean, certainly as a financial advisor. And, right now, you can go to my website and book me directly. And this is probably not going to be me for very long. And you've got to then go all the way out to the 23rd because we are booked up, between now and then. So, it's a good problem to have for me, but, we're looking at bringing on other people, and those people are going to be the ones who answer the phone calls coming in soon. And so this is limited time. I mean, probably we're talking, this is something that's in within like weeks, probably even next month. I'm probably not going to be taking a lot of those intro calls unless it's for like real big dogs. So, now, I've been taking calls with everybody, giving everybody a little bit of piece of time, giving them some information. Some people aren't even good fits as clients. I'm still giving them, good information to help them out.
Absolutely. And again, if you haven't already, hit that like button. I really appreciate it, guys. Join our new newsletter at www.iambanned.com. It'll help us when we inevitably get taken down by YouTube, because we definitely will be taken down by YouTube. You can become a client of Tim's at thelibertyadvisor.com. Obviously, you can get merchandise from the Wham Teespring store still. It's really appreciated there as well. You can get your tickets to AnarchoVegas and CryptoVegas. So make sure to go to those sites. I believe it's all listed below, and use promo code WHAM to save 10% on your tickets. And that is obviously in July in Las Vegas. And it should go on, assuming that they are right federally anyway, as far as the shutdowns go. It's crazy. I'm here in Mexico, and I'm loving every second of it. I just got an amazing new Airbnb for $400 a month. And I'm not paying in the US or anywhere. So I'm basically saving money by being here. And your super chats keep me alive and make it possible for me to make these videos. It's never been more important before for us to get the truth out there. So hitting the like button, sharing on social media, going on float.app, flote.app, and joining me at Josh Sigurdsson as well as at Wham helps a lot. Going to our subscribe to our Patreon, GoFundMe helps a huge amount as well, guys. That goes straight to me, and then I am able to actually pay for food and all this kind of stuff, because this isn't, Tim is doing incredible work helping us keep this thing together, doing the live streams, and he's working his butt off, and he doesn't have to be. He's doing it all free of charge, and it's really helpful and really appreciated. And on top of that, I'm trying to edit videos. I'm trying to get things done. I'm trying to compile shows, all that kind of stuff. And it is a cluster, to figure all this stuff out. And without money, it is more expensive than it appears. Even though I'm sitting here on Zoom with some printed wall of tropical paradise or whatever. But hey, I really appreciate
it's not a green. It's actually not a green screen. So it doesn't.
It really isn't. It's like, it's actually there. It's but anyway, so I really appreciate anything anyone could do to help out. And also, again, we are on, we have Bitcoin, Litecoin, Dash, and Bitcoin Cash in the description. I still haven't put Monero there, damn it. But we're there. You can donate to any of those to help keep us alive. Again, hitting that like button helps. We're on STEEMIT. We're on BitChute. We're on Minds, we're on Instagram, we're on Twitter, we're on all of the things. So go and join us on all of the things, because eventually 1 or 2 or 10 or 20 of these social medias are going to delete us. One that won't is float.app. So that's my number one recommendation, flote.app. Anyway, I really, really appreciate everyone who has joined us today. _M says, Josh, do you speak Spanish? Yo hablo poquito español, is no bueno, but I get by here because it's really not that hard to get all the basics done. I've spent a lot of time in Spain and etc. Anyway, MGTOW says lightning. That is how fast I am talking right now. And go figure. We are going to wrap it up. I appreciate everyone joining. Again, share on social media. Hit that like button. I'm going to advise Tim to press end on the live stream after about 5 seconds after I sign out, because everyone's missing my beautiful end phrase that everyone's been waiting for. And we all know what that is. Thank you very much for joining us today again here at Wham, Tim. And until next time, this is Josh Sigurdsson and Tim Picciott signing out from World Alternative Media. Find the truth, be the change.